today's media brief is essentially covering first quarter 2024. We're grateful that you made time this morning to join us for that. As usual, we will be covering some metrics, capital markets, development matters that are occurring. Looking at the previous quarter, looking at the performance of the capital markets and other issues that are occurring, pertaining to some of the key projects that we have. The Commission will have capital markets master plan, the 10-year long-term strategy for capital markets development. We are also undertaking some work around sustainability, specifically looking at the green bonds and the work we are doing under the Green Finance Ministry Working Group and the National Financial Inclusion Strategy, among others. So I think we will be handing over to CEO in a short while. And I hope other logistical issues have already been discussed on the team.
Yeah.
So CEO will be handing over first. I think they're still handing over the working paper.
Okay.
David working paper.
Okay. But I think we can start with our introduction. It's a small, intimate team. Maybe let's get to know who is here. Yeah.
You can start from our side.
My name is Phillip Chitalu. I'm the CEO. I think I've met most of you.
Diana Sichone. I'm the Director Enforcement and Legal Services here at the SEC. You're welcome.
My name is Mazo Wangula from DMHU.
My name is John Manager financial.
My name is Iron Lowisha from Services.
I'm Juliet Makwana from the Millennium Region.
Okay.
Sharon from the Millennium. Cecilia Shivamani.
The people at the back.
Good morning, everyone. My name is Osha.
Okay, guys.
Good morning. I'm Chitalu with SEC and the
Can I have a laptop?
depends on this one.
Just 2 minutes for a logistical issue. I thought I could use technology to access the speech from my phone, but for some reason I moved from my office, come down here, and I can see it. So let's just get my laptop so that we can start. It's not our intention to delay or keep you longer than is necessary. You, the media, provide a means of us getting our message into the public, and through you we can develop the capital markets together. Cholo, can you pick up my laptop? Let me just see. I wish it was on WhatsApp or something like this. Unfortunately. And people want A+ for this. You know, I wish our weddings could, you guys are going to be getting married. Can we start with cutting the cake and then moving backwards to the speeches, as it were? So I was almost starting with cutting the cake before something came through. I think as introduced by Mr. Mwanga Kondolo there, we are here to look at the first quarter results with respect to the capital markets that the Securities and Exchange Commission is charged with regarding what the law requires. When we get to the questions and answer, frontier by the two directors for the two departments, the company secretary and legal services, and of course market supervision and development. Colleagues, could I start by saying that the capital markets plays an important role, as we are going to demonstrate and as you have come to understand, that this is part of the barometer of trying to see how the economy is moving, including the allocation of resources. So key economic performance indicators that we closely get to watch or track is inclusive of the gross domestic product, or GDP, the growth in there. Of course, we get to look at inflation figures, employment data, and other central bank policy decisions. Inflation is very key if you are looking at things like investment. If you are investing in an inflationary environment, then your return should be able to cover the inflation. Otherwise, then your investment is going down in value. Of course, exchange rates. If you're an external investor, you bring in dollar, you want stability in exchange rates. So we get to look at that as well. Interest rates, for people to put money in long-term investments, the level of interest rates is a consideration in making the decision. So that's by the way of introduction. But in terms of the performance of capital markets, for the first quarter ended 31st March 2024, we did note that the factors that I mentioned, including the fluctuations in the exchange rate and the global economic trends, these, including drought, the El Nino factor, these have affected the performance of the markets. The capital markets is one sector of the financial markets, so they are not insulated from the negative effects of these factors that I've talked about. In the period under review, government bond yields remained relatively stable, around, I think the highest around 25-26%, which does reflect investor confidence despite some of the factors that we mentioned above. So whilst the challenges persist, including the currency and inflationary pressures, capital markets exhibited a resilience in the face of various challenges, and we strongly believe that the ongoing economic developments, including the debt restructuring, will positively affect the way capital markets operate going forward. I think some of the economic restructurings include the ongoings in the mines. We are all aware that Mopani, the government found an equity partner, and we hope soon KCM goes a similar route in terms of resolving those issues. So inflation had continued to rise, I think, as issued by Zambia statistical agents. We ended the quarter or the month, it's now gone to something like 13.7%. Compared to last year, if you recall, last year, similar period, inflation was around 9.9%. So that gets to affect the level of investments. So the persistent depreciation of the exchange rate, as well as the prevailing high commodities prices, such as maize and everything else, will certainly continue to affect inflation, as stated by the central bank. And these factors remain key upside risks to the inflationary pressures, and should be watched as we look at the level of investments. So a well-functioning capital markets will support, like we've said, the allocation of key resources, and we have a few factors that get to support that particular session. So for the economy to move in a particular direction, especially as regards investments, we need to have a well-functioning capital markets. So how did we perform as capital markets in the first quarter? From a perspective of looking at the market as a whole, the level of investments increased by 10.08%, and we'll break down this number, closing at 102.67 billion. This is as at the end of March, compared to 92 billion at the end of December last year. So that's a 10% increase. How was this growth? What drove this increase? This growth was driven by the increase in the market price of shares listed on the Lusaka Securities Exchange, and the notable ones included the increase in corporate bonds attributed to the registration and subsequent issuance of the first ever green bond. I'm sure some of you may have visited CEC by now. They raised $53.5 million, or about 1.34 billion in kwacha terms, to put in a solar power plant on the copper belt. I'll challenge you, some of you journalists who haven't visited CEC yet, go there and see for yourself how possible it is to raise funds on the capital markets and come up with a project that develops, that creates jobs and develops our energy sector. So go to CEC and see what has been done. I think the president launched this earlier in the quarter. So the market capitalization is basically a representation of the number of shares issued or listed on the Securities Exchange multiplied by the prices. So when the prices are going up, then you get to see this particular performance. So in terms of the market capitalization, it closed at 22% of GDP. Just trying to see the size of the market. I think at the last quarterly brief, we must have been at 18.5% or thereabouts. Now, as at the end of March, we closed at 22% of GDP. Our target in the capital markets master plan is to see to it that the size of the market is 27% of GDP. So we are at 22, still 5 percentage points below our expectations, but this is a long-term expectation which goes all the way for the next 10 years. So growth in the market capitalization was mainly driven by share prices, like I said, in the listed entities, and notably, there was significant growth in the prices of Standard Chartered Bank shares, Zambia National Commercial Bank, Real Estate Investment Zambia, Zambia Butter Shoe Company, and other companies are listed on the Lusaka Stock Exchange. Now, in order to simplify the tracking of the movement of the performance of the Lusaka Stock Exchange, we track the Lusaka All Share Index. This is just a representation of the performance of the market. So the Lusaka Stock Exchange Index went up by 14.7%, closing at a all-time high of 12,703.3 points. So this is where, if you started tracking the market at 100, so the market has now reached 12,703.3 points. So what does 14.7% increase actually represent? So if you had invested in all the securities, or if you created a portfolio on the market, on the LUSE, your value would have gone up by 14.76%. And that, to me, that sounds higher than some of the bank deposits, higher than your rental income. Rental income is only about maybe 8% of the value of the investment. So 14.76% is quite a significant increase, and it's above inflation, which means your growth would be a positive growth. So overall, the movement of the Lusaka All-Share Index, or LASI, LASI, is influenced by a combination of macroeconomic factors, company-specific performance, investor sentiment, and of course, global market dynamics. What are we saying? The share prices is reflective of how people perceive the performance of the individual companies that are listed. If a company pays dividends, people get to have a lot of confidence in that, and then the bidding process gets to increase the share price. For instance, we note that investors reacted to the recent news as seen by the gain in the ZCCMI share price, which went up by 13% during the period under review. Basically, this is a reaction by the industry, which is related to the 1.1 billion capital investment by the International Resource Holdings into Mopani. This is what I'm saying. So when people expect positive things, they bid up the price. And that is basically a reflection of how the market perceives a particular listed company. If a company makes losses, the opposite usually gets to happen. People expect to see poor things, and then the prices get to go down. The other sector that the Commission looks at, other than the listed entities, is an area we call collective investment schemes. This is where small savings are made. I'm glad to say that despite a decrease of about 28.5 million during the quarter compared to last quarter, we still seated at 2.388 billion as at the end of March. This is one of the highest numbers in the last couple of years. So the fall in the value of assets and management is basically driven by a reduction in the foreign currency denominated collective investment schemes, where we saw a reduction in the values and the number of investors investing in that product. In terms of the global perspective of our collective investment schemes, we still have 468,993 people investing in collective investment schemes. This is about 6 to 7% of adult population. At the last FinScope survey, I think we were less than 3%, but we have since grown in the last 5 years to almost 7% of adult population. So we continue crying to you, the media, to disseminate information about the performance of some of these investments away from the usual Ponzi schemes that promise higher than normal profits, but then people end up losing money. So these are legitimate products that people should be investing in. So like I said, in terms of the foreign collective investment schemes, that's what we lost, about 80 million. But collectively, I think the reduction is not as much as it should have been. The other area, remember I've mentioned the Lusaka Stock Exchange, where listed businesses get to raise funds. We've talked about collective investment schemes. So allow me to move on to the third area where we get to concentrate. This is corporate bonds. So corporate bonds is actually supposed to be the key area for any developed capital market, which we're trying to do with our 10-year master plan. So in our capital markets, the total amount of corporate bonds outstanding at the end of Q1 was 2.5 billion compared to 1.1 billion at the end of quarter 4 in 2023. This represents over 100% increase, and most of it is attributed to the first ever green bond, like I said, where CEC Renewables issued a corporate bond amounting to $53.5 million, or $1.34 billion, like I said. So a green bond is basically a corporate bond with green credentials. Funds raised through a green bond issuance have to be invested in green-related kind of investments, and my colleagues here will speak into that. So that's a very, very good thing to do, and we'll speak to when we talk about that going forward. The fourth area is government bonds. Government bonds trade on the market. In the first quarter 2024, we recorded 1,809 trades. It doesn't sound like a lot, but you may recall that this is a growing area with a number of our investors getting to understand that they could invest in the government bonds issued by government through the central bank, but these can trade on the secondary market. We need to probably break this down. What are we talking about? So when the government issues bonds through the central bank, that is called the primary market. Now, it's possible that when somebody runs dry and they need to convert the paper into liquidity or money, they can actually go to the secondary market and sell their paper on the secondary market. So the beauty about the growth in the number of trades provides liquidity to this particular segment of our capital markets, and it gives confidence for the first-time issuers, not the first-time investors, to see that they can exit when and where they feel like doing. I think, let me give you an example. When we conduct awareness and we compare secondary trading, let's look at car business. When I ask my usual students what type of car would you buy if you wanted to sell it in the secondary market, most of them will probably say a Toyota Corolla, or there's a new car now, the small one. What's the name of the small car? The Vitz. If you buy other brands, sometimes it's very, very difficult to sell them. But you'll probably buy a Vitz and you can easily sell it. So the same happens to corporate bonds and government bonds. If you are able to sell them to the next person, that provides confidence that I can invest in this particular security and I'll still get my money out. So despite the economic performance, we still have a lot of interest and activity being shown, being recorded in the secondary market trading, and that shows confidence in the government paper. So that's the fourth area. Our fifth concentration is the green space, I think, which we have already talked about, scoring a first by issuing the government bonds, but we are further developing this area in terms of how best to leverage on this particular area to develop our country. So my colleagues will probably speak into other areas that we're talking about, including development of a tagging and reporting system for the financial sector, developing of the green finance strategy. This is now a sector-wide kind of development that's inclusive of our colleagues at the Central Bank and the Pensions and Insurance Authority. And then we're also trying to excite the municipal councils. I think they need finance. They need to stand on their own, go to the markets, raise finances, and get to develop their local areas. So the municipal bonds project is something that we are working on. We are working on this together with our colleagues, UNCDF. Then we are further developing a regulatory roadmap for nature-related risks, and such a draft has been done. And then together we are with our colleagues in the finance sector, the creation of a green and sustainable finance coordinating unit, so that as a country we get to do these things in a coordinated manner. And of course, could I still repeat that we require the media to help us disseminate the fact that the Ministry of Finance and National Development and ourselves are still started the implementation of the Capital Markets Master Plan. Like I said, this is a 10-year strategy that should be able to develop markets to a level where raising finance and making investment becomes an everyday activity. During the quarter under review, like we always do, Financial Literacy Week, all these other 5 areas we've talked about are unlikely to develop if we did not have a financially literate population. Now, we're not talking about adding numbers. We are talking about knowing the financial products so that we get to invest in safe, secure, and products that can make a positive return on our investments. So we are not saying people are illiterate, but what we're saying is some of us, most of us, could be financially illiterate. And financial illiteracy does affect the development of our financial sector. So we again speak to you, want you to keep helping us. Educate people, don't invest in Ponzi schemes. If something promises 100% return in 1 week, that sounds like Ponzi, that sounds like doesn't make sense. And make decisions that does not lose your money. So during the Financial Literacy Week, 3 schools that participated in a challenge or a competition were awarded prizes as follows. And this was done in Eastern Province so that we do not just concentrate on Lusaka, but we go to other provinces as well. Anoya Boys Secondary School got a first prize of 10,000 kwacha for coming out tops during the savings challenge. Kasenengwa Secondary School was second with 6,000 kwacha prize, and Impezen Park Secondary School came out with 4,000 kwacha as a third prize. My colleagues are here to answer questions that if people wanted to get more details around that. Remember, we've talked about equities, we've talked about collective investment schemes, we've talked about corporate bonds, we've talked about government bonds, and a few other exciting things that we're doing, including financial literacy. But part of building financial literacy means that we need to have teachers. We need to have people who can get more insightful knowledge about this to teach others. So the capital markets capacity building is another area that we looked at, and we are proud to announce that Zikas University has partnered with Chartered Institute of Securities and Investments, and they'll be launching this program starting 2nd June 2024. This is a program where professional courses are going to be offered so that people can now have certificates that they can use to demonstrate their acquired knowledge within the financial sector. And of course, through you, the media, I've been advised to advise you to help us tell the public there that we moved from Parliament Road to this corner of Great East Road and Libala Road in Kalundu. We've been here now for a month. I think this is the 4th week. So through you, through your articles, you should be able to alert the public if they need to reach us. In conclusion, let me end by looking at what exciting things are we looking at and where are we going. The performance of Zambia's capital markets in the first quarter, of course, had these mixed things, challenges and opportunities, like I said. However, we strongly believe that the policies, the fiscal policies that have been put in place by government should be able to help the markets recover beyond the numbers that we've talked about. So looking ahead, we positive that the debt restructuring will result in positive outcomes, not only for the economy, but the capital markets is part of our economic actors, such that future performance will be anchored on a better economy. So if we are to look at what three things can we proudly talk about and see to it that you hold us accountable next time you are back to visit us. We strongly expect CEC renewables that raised $53 million to come back to the market to raise another $140 million. Now, money sometimes is elusive unless it's linked to a particular economic activity. The $53 million they raised, they are currently generating a slightly over 47 megawatts of power on a daily basis. I was part of the team that visited CEC 2 weeks ago to see for myself where the money that was raised from the capital markets has gone. So we expect that with another $140 million being raised soon, we should be able to see that their contribution not only to the green agenda, the sustainability agenda, but to the performance of the economy by further supply of additional power into the grid is made. So we hope that by the time we are seated here in the next quarter review, we'll be saying CEC came back to the market and raised more money. We expect that a real estate investment trust, or a REIT, R-E-I-T, which was registered last week by the Commission, should be coming to the market. We cannot talk about the values at the moment until all the properties in this particular REIT officially communicated to us. Now, a REIT is basically a collection of investment grade properties that are put in a pool and then units issued to people to participate. So it becomes possible for individuals like you and I investing, for instance, in a mall by just owning a few units in a particular mall. I hope that all the malls that are surrounding us here will one day be part of a REIT, and you and I will be able to invest in such a REIT. We also expect an announcement regarding a $500 million bond, which was again registered by the Commission and should be on the cards coming up. So those three things, there are a lot of other exciting things, but we thought for this particular media brief, we concentrate on those three things. $140 million by CEC, likely to be raised for more power generation. REIT registration, a REIT registration incorporating quite a number of properties, and of course a $500 million bond, further adding to the performance of the market. I think with those things, we can take questions. Thanks for listening. We can take questions. Questions? Ladies first. Controversial interest. You can speak about it.
There's a hand there.
Oh yeah, oh, go on. I thought the lady would go first. So, gentlemen.
Thank you so much, Mr. Chitalu, for this briefing this morning. And just to get to find out, from the briefing we've had here, it looks like the capital market has remained strong, coming from 2023 to 2024. The rate was the first quarter of 2024. Now, I'm just wondering, maybe I don't know from the financial aspect of it, why hasn't it impacted positively on the local currency?
Okay. Good question. Next, any other questions so that we check?
Just the usual, you introduce yourself so that you can interact and send you places. Next question, please. Maybe you can just give us a name of it.
Yes, Oscar who I read for Umbo.
Okay. Any other questions, please? Two more questions so that we have three and. Okay. Yes, lady.
Good morning. This is Chitalu from Money FM.
Okay.
I just want you to elaborate more on the regulatory roadmap that you are developing for nature-related risks. What are the objectives?
The last one before we take a break so that, yes, lady.
Okay, for me, I think I'm just curious.
Your name and where you're coming from?
Juliet Mafana.
Okay. Okay.
Yeah, for me, I'm just curious on comparisons in the uptake between the corporate bonds and the government bonds. Like, which ones are people going for more, and what would be some of the reasons for that?
Okay, so here's how we answer. I'll answer the last one and probably the first one. The two ladies, the two directors around me are more nature-related people, the green people. So I'll let them tackle the nature-related, what are we doing? So in terms of the impact of the capital markets on the local currency, what you need to understand is that over 60-70% of the trades that actually happen on the capital markets is local participation. So we're basically using kwacha, if you like. So we have a component of about 30%, which is foreign related. And that could be the only one that could impact the currency, as it were. Now, in terms of the way markets operate, when there's a trade in the secondary market, it's a trade amongst investors and not a trade with the issuer. So there's no fresh money that is coming. So it's you selling me shares, and then maybe I own what's got to sell to a third person. So this is all local kind of activity. But within the secondary market, of course, we have foreign participants playing, and we do monitor that statistic. I hope one of my colleagues has that statistic. We are always wanting to see of the trades happening. Is there an outflow of funds from the economy, or is there an inflow of funds of the economy? So your question is, what's the impact of this on the local currency? I think we need to develop markets further so that we could have a huge impact. There is always an impact, but the impact is not as much as we expect. And this is why we're talking about the Capital Markets Development Master Plan. So that every time and each time we see trades on the market, I think your answer should be answered by the activities on the market. So we have a huge component of local, 30% of foreign, but that small 30% of foreign in a small market does not seem to be affecting the current activities, as it were. In terms of, Juliet, the last question that you asked, so that my colleagues will jump into the second question. Corporates versus government. There's, I think this is public knowledge, that there's over 160 billion government bonds outstanding. And like we reported, there's only, what's the figure again? There's just about 1.5 billion of corporate bonds. So in terms of volume, certain corporate bonds, we could do better, but what is the effect? What is impacting negatively on the growth of the corporate bonds? Remember, we talked about interest rates. Your yields on government bonds is around 26%. And governments generally are considered to be less risky or risk-free compared to corporate entities. So in a competition, who would you give? Somebody with risk or somebody with less risk? Of course, you'd go with the person with a lower risk. So the person with a higher risk only gets your money if they're offering a higher return. But currently, government bonds are offering up to about 26% yield. So nothing beats the government yields in terms of that. So basically money, like economists say, it's a crowding out effect. So once government borrows less, then there will be more resources available for the corporates, and then we can see the corporate bonds market developing as well. Second question, I think Lee and then Diana, they're all green people. Nature-related risks.
Okay.
Why are we doing it?
Thank you. With Chilawa, Chiluba. Okay, thank you for that question.
Okay.
It's on. No, I think they're registered.
Okay. All right. So thank you for the question. To answer it, I'll just give a very brief background to our sustainability journey as a commission. I'm sure most of us have seen the effects of climate-related risks and what the country is going through right now with the drought that is happening. So as a financial sector, we chose to be proactive in terms of us also playing a role towards fighting climate risks. And one of the things that we have done is to develop a Green Finance Mainstreaming Working Group, which comprises of the 3 financial sector regulators, that's BOS, SEC, PIA. It also includes the Ministry of Green Economy, the Ministry of Lands, and other key partners such as WWF and the UNDP Biofin. So some of the activities that we've been doing, and speaking to what CEO here mentioned, we are starting to see the results to the issuance of the first green bond by CEC. So that bond is a little bit different. So it is an ordinary bond, but then it has certain requirements that it has to meet for it to be classified green, meaning that it has to be invested in a project that is climate friendly or that is sustainable. So coming to nature, one of the things that we are going to be seeing very soon, and Zika, I think, has already endorsed the sustainability reporting standards that were issued by IFRS. So we will now start seeing companies reporting more on their activities and how they relate to climate. But one of the things I think where we saw a gap and where we are now moving in is around nature and biodiversity. That is why you are now seeing us trying to integrate the reporting on nature-related risks. So what we want to see now going forward is entities also beginning to disclose how their activities are impacting nature and biodiversity. So for example, if let's say you want to do a project and it involves you cutting 100 trees, we would want to have that information, and then what do you do? And so that we can start reducing on, or have entities reduce on activities that have got a negative impact on nature and encourage them to undertake activities which have got a more positive impact on nature and the preservation of biodiversity. So that's what we are currently working on. So in the long run, you start to see that more of these entities will be disclosing more on how their activities are impacting the environment.
Yeah, I would want Diana also to speak about that same thing from a legal perspective and what we've done as a commission from the legal perspective. Diana?
Yes, as Leah and CEO have mentioned, the Commission has looked at its regulatory framework, and what we've done is we've tried to look at what works with the current regulatory framework that we have. So we have issued a number of guidelines to assist us in terms of actualize the Commission's plans in terms of the green financing agenda. And as far back as 2019, we issued the green bonds guidelines and only had the first issuance in December last year. But then we were proactive as a commission and were able to have this enabling environment and in terms of the framework being available from as far back as 2019. But if you look at the Securities Act looks at securities. And for us, we have an enabling framework that a security is a security. A green bond is a security. It's just that for a green bond, it is a special type of bond. Otherwise, the framework for the issuance and registration of bonds is available, and we ended up having to come up with guidelines for green bonds. I also wanted to mention something that all this work that we've been doing, we've been working with partners, and it's very important that we also acknowledge the important role that they have played. Like, for instance, even in this particular question that has been asked, we've been working with the financial sector Deepening Africa, in addition to the other stakeholders that are on board that were mentioned earlier, the Bank of Zambia and the others that are also important. We can't do this on our own, and that is why we need all the relevant stakeholders, including yourselves as the media, who are able to help us disseminate this information to make sure that everybody, because the benefits for the greening of the financial sector then translate into bigger gains for the whole economy. Thank you so much.
You know, I never used to understand sustainability and the green and everything else. But I think we need to break it down to very, very simple aspects, especially from the capital markets perspective. Remember, we did speak about the number of institutions listed on the Lusaka Stock Exchange. I can pick out a few. I'm not saying anything, but there are quite a number of them that have a direct impact or could be directly impacted by the environment, for instance. So if you're into agriculture and if the drought continued, can you imagine NAPSA has invested some of our NAPSA money into those agricultural related businesses, right? So basically it's our pension schemes at risk. So that's the way you should be looking at sustainability and the risk of not doing nature-based kind of environmental care, as it were. So look at it from that aspect. An agricultural company without water is dead. And if a company is dead, that means all the investors in that company lose their investment. So some of you, I can see, are quite young. You'll be probably accessing your pensions in the next 30 years. So if there is no water in 30 years' time, that means your investment is lost. So sustainability, green economy, and everything else should be looked at from that aspect. If you have invested in a power generation company that does only hydro, if there is no rain, there is no hydro, which means the value of that particular investment goes down. So this could go on and on and on and on, and you get to see how activities by listed businesses could be impacted by the environment, or actually how they can impact the environment as well. So let's look at it from that particular perspective, not just like it's a fad, like somebody is just trying to promote something, but it's very, very real. Yeah, sure.
Just to add something, when CEO was talking about how we started and understanding sustainability, people tend to wonder to say what is the role of capital markets or the financial sector when we talk about sustainability. But I think the financial sector plays a very critical role. Recently, the Ministry of Green Economy developed and launched their green growth strategy that is aimed at outlining how we are going to green the entire economy in Zambia. But for such a strategy to be actualized, what we are doing as a financial sector together is now developing a green finance strategy that is tailored at supporting that green growth strategy, because for the ministry to be able to attain that objective, there is need for financing. And now we are seeing investors shifting in the way in which they want to invest, because now most investors want to invest in projects that are sustainable, projects that are climate and environment friendly. So we have a very critical role to play as financial sector to make sure that we create an enabling environment where such sustainable and green finance can be raised so that it can then be channeled into the various sectors of the economy. And the CEO also mentioned that we are working on the development of a tagging and mapping system. So what you're going to be seeing also in the future is we'll now be reporting on where these flows are going, which sectors they are going to in the economy. So when financing is raised, for example, with CEC, it's very clear that we are talking about the energy sector. So we want to also see in future how much is flowing into the agricultural sector, how much is flowing into the mining sector. So these are some of the initiatives that are currently being worked on. I just thought to add some.
Okay, very good points. Any more questions? Yes, ladies. Okay.
From the CC green bond issuance, what are the opportunities for local investors in the next issuance?
Very good question. And I was seated here yesterday when I was asked the same question. We had a visit from parliamentarians, and that's the question that was issued. Asked. $53 million was basically raised through a private placement. Now, what's a private placement? So a private placement is where an issuer is a person wanting to get money by issuing something, a paper. So what we do as a commission is we register securities before they can be issued to the public. How the issuance gets to happen is not necessarily regulated. So what do I mean? Whether it's an IPO or a private placement, that we do not regulate. So the CEC bond was basically anchored by two institutions that took up the 100% issue. We hope that when the 143 million, because it's a bigger number, gets to be issued to the market, a little bit more players, individuals, and everybody else could be entertained, as it were. But the final decision regarding how somebody raises money depends on a number of factors, which may include the costs and the willingness by the public to invest in a particular instrument. So we do not regulate how that paper gets to be issued, which investors get to invest in there. Investor decisions are made by the investors themselves and not the commission. So two institutional investors invested in the 53. But I thought I give a background so that you have full information that the commission does not regulate how the choice is made. The choice is made by the private sector. Any other question? Any other question? Going once? Looks like we've exhausted the questions. Back to you, Mubanga.
Okay, thank you so much, CEO, Directors, for that update. And obviously, for engage media too. Has been mentioned, the role of the capital markets, very critical. I think you are one of the primary institutions, stakeholders that we use to terms of interest in customer discussions and developments going forward. So I think we've come to the end of our session. We will ask that you remain behind so we can, I think, sort out some housekeeping issues for you. With that being said, I don't know if you guys have anything else to add. Otherwise, thank you so much for your presence, and we look forward to having you at our next video briefing.
Thank you very much.